Using an SBA loan for a business acquisition. When it comes to acquiring an existing business, financing the purchase can be a major hurdle for entrepreneurs. Fortunately, the Small Business Administration offers loan programs specifically designed to assist with business acquisitions. An SBA loan for a business acquisition can provide favorable terms, lower down payment requirements, and longer repayment periods. The most commonly used program is the SBA 7(a) loan, which provides funding for a range of business purposes, including acquisitions. Before pursuing an SBA loan, thoroughly evaluate the business acquisition opportunity. Please like and subscribe, click the bell icon to get new video updates, and leave your comments below. Conduct comprehensive due diligence to understand the business's financial health, market position, customer base, and growth potential. Each SBA loan program has specific eligibility requirements. Factors such as credit score, business experience, financial history, and collateral availability will be considered during the evaluation process. Understanding your eligibility will help determine if pursuing an SBA loan is a viable option for acquiring the business. A well-structured and detailed business plan is crucial when applying for an SBA loan for a business acquisition. Your plan should outline your strategy for the acquired business, including growth plans, operational improvements, and financial projections. Obtain a professional business valuation to determine the fair market value of the business you intend to acquire. This valuation is important for both negotiating the purchase price and presenting a realistic financial picture to the SBA lender. SBA loan applications require comprehensive financial documents to assess your financial health and repayment capacity. These documents typically include your personal and business tax returns, financial statements, bank statements, and cash flow projections. SBA loans for business acquisitions are administered through approved lenders, including banks, credit unions, and nonprofit organizations. Research and identify lenders with experience in financing business acquisitions through SBA loans. Assemble a comprehensive loan application package that includes all the required documentation, your business plan, financial statements, purchase agreement, and any additional information requested by the lender. Be prepared for potential negotiations on loan terms, including interest rates, repayment periods, and collateral requirements. The SBA loan programs offer favorable terms, lower down payment requirements, and longer repayment periods, making them attractive for acquiring existing businesses. By understanding the available SBA loan programs, assessing the business acquisition opportunity, and determining your eligibility, you can navigate the process effectively.